Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Wednesday, May 12th. Taking a quick look at futures, a little soggy this morning. ES futures down 0.3%, NASDAQ down 0.5%, small caps down 1%, oil up 0.75%, copper up 0.5%, and the precious metals are flat. It is 6:16 as I'm starting the video. Front and center this morning is the CPI print at 8:30. That's going to be a closely watched number. Give us a read on inflation, consumer prices. And as I say in the notes, I mean, we all feel the inflation from the gas pump to the grocery store. If you're a renter, I wouldn't be surprised if you got notices of rental housing cost increases. I mean, everywhere we look, there's inflation, shortages in the things that we want to buy. I was looking for some parts for my bike. They just don't have them. They can't get their hands on that stuff. So, and the things you can get in the used market are the same price as a new one, or even higher. We see it in car prices. Used car prices are at basically all-time highs. So we all feel inflation, but the government statistics have a way of either understating it or completely missing it. So just because we feel it doesn't mean it'll be reflected in the numbers necessarily. So what I want to do this morning is look at the dollar, look at bonds, which should have a reaction based on the print, and then we'll go through the Indexes FATMAAN Names and then wrap up with Semiconductors this morning. So here we've got the weekly chart of the US dollar, and you can see that we've been on a slide ever since COVID. We bottomed out in December of 2020 down here at 89. We've put in a fib or relief rally bounce, and now we've rolled over and we're heading back down. You ought to keep 89 in focus as the prior low. What could happen is obviously come down for a double bottom and then rocket higher, or break down to fresh lows. And if we break down to fresh lows, that's going to help precious metals. That's going to help all the commodity complex. Everything is priced in dollars. So if the value of the dollar is going down and you want to buy a ton of copper, then the price is going up. So that'll have a big impact on commodity prices. So, and I think I mentioned precious metals as well. So we want to watch that, especially if you're loaded to the gills in commodities. You may see a big jump there if the dollar breaks down. It's also beneficial to emerging market economies. Whenever the dollar falls, that's usually a positive for emerging markets. So that may be a place to look on the transition or a break to new lows. I mean, they've already gone up a lot because of this drop, but they can always go higher if the dollar takes another leg down. And if you take a look at this move and then call this a bear flag, you can see that measured move would put it way down here towards 80. So I'm not making a call. All I'm saying is from a technical perspective, that break of 89 could be significant and open up a trap door for much lower prices on dollars. Taking a look at bonds, very much the same kind of looking chart. Rising yields, falling bond prices. We bottomed out here in March, down around 132 and change. We've put in a bounce, but notice prices have been capped by the declining 50 EMA here in green. And over the last 3 days, ever since that disappointing jobs number, we had a spike where yields fell dramatically, but then they closed almost on the highs of the day. And then Monday was a significant rise in yields. And here again yesterday, we dropped below this 138, which I view as a very important level. Why? Because of this large volume over price resistance layer. These large spikes in this profile often and do act as support and resistance. So that support layer broke and now we're below. So of course today on the CPI print, if it comes in super hot, I would expect yields to rise and TLT to fall. The next layer of support is at 135. You see that break, and then it won't take much to go down and test the prior lows down at 132. The converse of that, of course, is if CPI comes in real soft, shows no inflation whatsoever, you may see yields drop, which would, of course, make TLT rise. So going to be a lot of focus on that. And remember the ramifications of the bonds, even if you're not a big bond trader, we've seen when yields rise, it puts pressure on the bubble stock complex and tech in general, and helps the cyclicals, helps commodities, that kind of thing. So that value, reopening, cyclical, commodity trade, that benefits from rising yields. And if the data shows no inflation, you could see, the financials and cyclicals and commodities take a hit depending on, what the print is and what the reaction is. So let's take a look at yesterday. It was pretty interesting. SPY 2 hour, we had the big gap down. We went down and touched this 410.50 level, which is key. And we got a decent bounce off of that, capped up around 415, and then settled in right at this 414 level, which we had identified as a pivot point in our prior work, our prior studies. And just as a reminder, if we go back to the daily chart, I have a break below 410.50 ushering in a fresh sell signal, and which would likely bring that down into this gap area down around 403, right in that kind of area. We do have this exponential moving average here. The 200 on the 2 hour is the same thing as 50 on the daily chart. So that 405 area would be a place, if this were to break, I would certainly anticipate a bounce at the 50. And you can recall all the times in the past where buyers have really stepped in at the 50 and stopped the bleeding. So that would be a very important level should 410 break. Now, looking at the 30-minute chart, I've got the overhead gap from yesterday from 418 to 415.27. I've got that here in purple. And what I've penciled in here, it remains to be seen if it's true or not, but this looks a lot like a bear flag to me. An initial plunge down, a modest bounce that chops around in a narrow range, and then the trigger for a bear flag breakdown is a move, below the flag. I would call that, let's just call it 413.50, something like that. But as far as trading today, whenever you enter a gap from below, that's an automatic buy, because that opens the door for a gap fill higher. By the same token, if it reaches the gap but is turned away, that becomes an objective level to try a short at gap resistance. So if we get a little push up to 415.25 and it stalls and it starts to roll over, then that can be a good place to anchor short, and with the anticipation that that resistance holds and then price falls away. Another entry point for me is on a break of 414. If you had missed that or were unsure, didn't take a position, I think taking a position on a break of 414 would be objective, because that's where the flag is. So, and it's a well-defined level. So if you see price come down and break 414, I would get short and look for a retest of 411.50 and or 410.50, the prior low from yesterday. Same kind of look for the Qs. We had the big move down into this 319 area. And if you go back in your prior charts, you will see that corresponded to we had a big gap between 322 and 319. That was filled. It's been removed from the chart. And now you can see the bounce has come up right to this, just below this 327 level. And you can see support here, that becomes resistance on the way up. So this morning, I would use, for the upside, I would use 327 as a level to get long, and then look for 329 and possibly all the way up to 334 if the market reacts very positively to the CPI print. For instance, if inflation was non-existent, I would expect tech to get a bid, and that may just pop this resistance level. Now let's look at the 30-minute chart. Again, I've got this depicted as a bear flag. What would foil that? A move above 327. If it takes out 327, it's not a bear flag. It was just a bounce that has kept going. So what keeps that bear flag intact would be a rejection at 327. It goes up maybe on an initial bar as soon as the market opens, but then it stalls and begins to roll over. That's going to be a pivot point for today on the Qs. Now, what if we don't even make that move? I think on the downside, a trigger would be a break below 324. And if you go back to, let's see if we can see it here. 324. That's going to be a support level now, because here it was resistance, here it was resistance, here it was resistance. So now that becomes support since we broke back above yesterday. So if we break below that 324 well-defined support level, I would expect a move back down to test at least this 320.50 area right in here, and then possibly the prior low down towards 319. So I think 327 and 324 are the levels that you need to keep in focus at the top of the morning. IWM. Impulsive move down right to 315 that we had shown had been support at least 4 times in recent memory, and that held like a champ, and you got a big bounce, higher up to this uptrend line, which capped the advance from proceeding further. And just as a reminder or a refresher on your active trading, whenever you have a plunge that comes in to a well-defined level, that is usually a good place to, one, either cover if you are already short, take your profits, and get yourself, one, either repositioned long, flip down here, because it was a very objective level right here at 215. I realized that happened quickly, but if you notice, there was another bar that almost came all the way back to 215. So cover your short, decide if you're going to go long, with a stop just below, and then see if you get the bounce. If you don't, you're immediately stopped out with a paper cut, and your thought process should be, wow, I guess we're going lower, because you took out that well-defined support level. Then quickly abandon the long idea, get short with a stop just above. And that way you'll jump back on the train that's heading south. Okay, here it is on a 30-minute chart. Again, fast move down, impulsive move down, and I've got this depicted as a bear flag. And we saw that in the pre-market, small caps are down 1%. So we are going to be, if that holds, and I'm sure it's going to move around after the CPI print, an hour before the open. But I would use 219 on the downside as a trigger level, and 220.50 as a trigger level. If there's a move, in the pre-market, if it just stays in this area, breaks higher above 220.50, I would get long. And if it breaks below 219, I would be short, looking for a back test or a double check on this prior low. I do have a layer of resistance here at 221.50. I don't think it warrants waiting to see if that gets taken out. There is some resistance there. If we break out above 220.50, I would get long and then see what happens at 221.50, and take the view that if we break out here in the morning, that price would be strong enough to take this out. And then if it doesn't, you've got a small win, and then you can potentially reverse it if it stalls. But I would take it here. I would take it at 220.50. And like I said, if it falls below 219, that would tell me that this looks like a bear flag, and then a drop below would initiate the next leg down. If you're new here, I really appreciate you spending some time with me. I put a decent amount of effort in on levels and coaching to get you oriented for the day. If you appreciate that kind of work, hit the subscribe button and the alarm bell. You won't miss any of my content. And then over in the show notes, you can actually register for all my content. That way you'll get midday notes trade advisories, trade ideas sent directly to your email box, and you won't miss a thing. A lot of people appreciate having that heads up when I see something. And if you register, you'll also get an invite to our trading room. We've got a growing community, good guys and gals with big hearts that are happy to help post observations and any questions you may have. So it's a good place for resources. And of course, longtime listeners, I really appreciate you being here. Give me a thumbs up and a positive comment. That'll let others know you value the work and hopefully grow the channel. So here on Facebook, I have dropped in a little channel. I don't know how valid it is. I mean, the bottom side of the channel seems well defined. We've got 3 touch points here. Then I just made a parallel line up here. Not as well defined as this one, but I think we are in a downtrend. This breakout here looks fake because they took it back down. But here's the deal. If for today, I think the pivot is 305. Why? Because that was a very important level on the daily chart. And I think that as long as price holds 305, I think you have a fighting chance of prices moving higher. There will be a resistance layer here at 310. If you've been trading Facebook, you remember that 310 was a problem for a while until it broke out over here. You can see how it came back up to 310 here and had a problem for a while. So 310 is going to be your first target above 305. But if 305 fails, that puts price back in a trading range below the breakout level. And then I think odds are that price falls back into test these prior lows and probably actually comes in to 298 to test this area here that was shown to be support at 298. So I think 305 is your pivot. If the market is strong, obviously higher. If it's weak, lower. And I think 305 is your key level. Apple, impulsive move down to this 122.5 area, a level that we had marked with a bounce up into this 126.50 area. And notice here, support, resistance over here. So that line is pretty valid as far as resistance level. I want to show you the daily chart on this just to give you a flavor of what's going on. I've got an uptrend line on Apple on the daily chart that comes in right at this 124 level, where you can see price drop down right into this 124, 123.50 area yesterday, found support right on the trend line, and then got the bounce. We can also tell that price is below all the fast moving averages. You've got the 8, the 20, and the 50, all in a cluster turning down. We see that RSI is below 50. We see that momentum is falling, but it's still above the 0 line. If you were a swing trader, on the daily time frame, and you were bullish on the market, and you see price come back to 124 today and hold, you can be long against 124. You've got trendline support and you've got lateral support at 124. And you know what? If it breaks, you're wrong. It's just as plain as that. And if it does break, you've got the 200 coming in here at 118.50. And so that would be the next big test if price were to break. And then, of course, if price were to lose the 200, then from a swing trading standpoint, you're on the wrong side of the chart. You know, the bulls would be on the wrong side of the chart once price drops below the 200. That's a demarcation line for bulls and bears, and you would probably see more selling coming in as algos and traders that use that as a point of reference for, do I want to be long a security. So, and that should inform you short-term traders, because just know that you've got some support at 124 on the daily chart. So if this comes back, don't be shocked if it doesn't break, because this was all momentum down here and then it recovered. So on the way back down, be wary of that 124 zone as a level of support on the daily chart. Here's Tesla. We had a channel coming down that broke. We took a deep look down to 590 yesterday, got a bounce, but that bounce, you can see, was capped at 625. We had 1, 2, 3, 4, 5 back touches of 625. I think that's your pivot for today. If you break above, I think it can come in here to 640, where you've got some overhead resistance and you've got the downtrend channel coming into play. But if you see this 625 stall, I think that is a very objective level if you're actively trading it, to look for a move lower to double check this low. And I've put on here that you've got the daily 200 at 580. So if you were in it and you got a break of 590, 580 ought to be a place where you ought to think about covering that, because that'll be the first time Tesla has touched the 200 in a long, long time. And I expect there to be a bounce there. Microsoft, I think this is an easy setup, or at least well-defined. I'm not sure if there's any easy trades, but 245 was a major breakout level. We can show it here. I've been showing it lately on the daily chart for newcomers. This was a resistance level. Big breakout above 245. Now we're back revisiting it. Prices below all the moving averages, the 820 and 50. So it's pinned there at the moment. If you're a big swing trader and you think this breakout level is going to hold, you can be long against 245. That's, very objective. If you're an active trader and you see price take out 247 in early morning trade, get long and look for 249.25. If in early trade it looks soft and 245 breaks, get short and look for a move back down into the 243 area. I think there's $2 to the upside and $2 to the downside for starters on a move either above 247 or below 245. If it's just oscillating in here at 246, I wouldn't do anything. Wait till you get a move to an objective level. Amazon. I saw a little news clip that Jeff Bezos sold $6.7 billion worth of stock during this period, and now he says, I'm done for a while. Maybe Mackenzie was selling, however many billions she wanted to sell to fund her things, but they say it's done now. And we find price right here in the middle of this range. Just like on Microsoft, I think you wait for a move either above 3250 or below 3200 for the next move, either higher or lower. And of course, you can use these levels as resistance or support as well. For instance, if you came back to 3200 and it held, you can be long against that and look for 3250. The free 50 club worked again yesterday, dropped below 3150, reclaimed it. That's your long, and you got a $75 move because you took out 3200 and went even higher. But anyways, the $50 ranges continue to work well. Google tested the bottom of the box at 2240, got a bounce to the midline of the trading range at 2270. I think you can use that as your pivot today. Above, you can look for 2300. Below, you can look for a retest of 2240. I wanted to show you the daily chart because it's a lot different than the other ones. Notice here, RSI still in the bullish regime. PPO, although it has turned over, is still well above the zero line. And I drew a trend line off of a swing low from back in October, and you can see ramp consolidation, ramp consolidation, ramp consolidation. And so you've got daily trend line support and the 50 EMA at 2200. So if you're on the short time frame actively trading this, and you got a break of 2240 and you were short, just know that at 2200 you got a lot of support, and I would be looking to cover there. And actually, that would be a very objective place to go long, because if Google is going to stay in the uptrend, it's going to hold, and then you're going to get a bounce. So that would be, a touch of the 50 and trend line support. It doesn't get any more objective than that to take a long. And if it loses 2200, you're wrong. Get on the other side of the trade, because if it loses the 50 and loses daily uptrend support, it's going to be going lower. So keep that in mind. Netflix, we've been watching this consolidation zone, head fake breakdown, came back up, broke down again, deep look down to 480 and bounced up. I think your pivot levels are 500 and this prior low here at 492.50. You break back into the zone, take it long, and look for 507 and then 515 on the upside. If it stalls at 500, that's an objective place to be short. Look for a move back down to 492 and possibly even 480, depending on how things go. If it just oscillates in here, do nothing. Wait for a break of 492.50 and then give it a shot if it breaks down. Semiconductors. I think this is a really good risk on, risk off kind of asset class. Support, bounce, fake breakout above 242.50, then a big breakdown down to 226, which is a support layer, back up to 233.50. I think that's your pivot based off of this swing low. You break above 233.50, I think you can be long. I think you'll at least get a few bucks out of that, if nothing else. And if the market gathers itself and, rockets higher, that's going to be a great trade location for a move, at least back up to 242.50. I mean, that's a $9 trade. That would be a great trade. As you're trading, I'll give you, for instance, we're sitting on Wednesday. If you buy options that expire on Friday, what you're basically saying is, I'm just playing for today and tomorrow, because the time decay on those options will accelerate as we move towards Friday. But if you say, you know what, I think the market's gathering itself. I see, everything I see looks positive. The Qs are going higher. Rates really fell. Blah, 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 blah. I want to play for something more. Go out 10 days from now. Go out 2 weeks from now. Get your calls that you can comfortably sit in for a while and see if you get that $10 move. And, so that would be an idea on, selecting strikes and time frames for what you want to do. And hey, if you're even longer term, go out to June. If you're playing for something much larger than that, then, buy more time to let it happen. And then as time moves along, you can, if you break out above 242.50, you can roll everything up, book your profit, stay long, and then stay in that trade. So, all right, that's all I've got for this morning. We've got the big CPI print. And remember, it's going to print an hour before the open at 8:30. That'll give the market some time to, have a couple of knee-jerk reactions. It's going to go up, it's going to go down. Then it hopefully will settle in to an area before the market opens. And then we'll be, a little bit more confident of what it looks like. But let the market play out for at least the first 15 minutes, because that first move is often fake, before you go, gangbusters long or short, so you don't get whipsawed. And I'll leave you with this one little line that I heard the other day that resonated with me. Our job as traders is to observe price action, not perceive it. Our job is to observe price action and not perceive it. Trade what is, not what you think will be. We all have opinions on, if a price will go up or down. But what that line is saying is, observe the price action. What is it saying? Is it breaking above a range? Is it breaking below a level? Is it recapturing a level? Is it stalling at a level? That is trading what is. An example of trading what you perceive is something like, well, it should be going higher, or this stock is undervalued. Things like that don't really help you in terms of active trading. You've got to trade level to level, be very objective, observe that price, and react to it rather than anticipating it, because most of the time when you try to anticipate the market, it will prove you wrong, and then that's a fast way to lose a lot of money. So I hope you have a good day of trading. Thanks for watching. Pass the link along to somebody in your trading group. I'd really appreciate that, and talk to you next time.